Cisco Systems, ticker CSCO, their stock traded lower on Thursday morning, despite the company reporting better than expected fiscal fourth quarter 2026 results and issuing guidance above Wall Street's estimates. Revenue rose to $17.25 billion. That topped the $16.82 billion analyst estimate. And adjusted earnings of $1.22 per share beat the $1.17 consensus estimate. Management described the current environment as the early stages of a multi-year networking and AI infrastructure supercycle. The company cited accelerating AI adoption, hyperscaler investment, enterprise AI deployments, cybersecurity demand, and high-performance networking. During the earnings call, CEO Chuck Robbins said companies increasingly view AI readiness, cybersecurity, and infrastructure upgrades as essential spending. Customers are shifting money from other budgets into IT because falling behind could put their businesses at a competitive disadvantage. Robbins said this spending is becoming similar to cybersecurity investments. Quote, "It's not just optional," end quote. Cisco said the trend is helping fuel what it calls a multi-year networking supercycle. Cisco's product revenue rose 24% year over year to $13.5 billion, while services revenue was flat at $3.8 billion. Total remaining performance obligations, or RPO, increased 7% to $46.7 billion, and product RPO rose 9%, while annual recurring revenue reached $32.1 billion, up 3%. Subscription revenue represented 48% of quarterly revenue. Software revenue increased 11% to $6.2 billion, and adjusted gross margins was 66.3%, while adjusted operating margin was 35.9%. Operating cash flow climbed 27% to $5.4 billion, and Cisco ended the quarter with $15.9 billion in cash, cash equivalents, and investments. The company also returned $3.2 billion to shareholders, including a $1.7 billion in dividends and $1.5 billion in share repurchases. Cisco had $8.1 billion remaining under its stock repurchase authorization plan. Product orders jumped 35% year over year in the fourth quarter. Orders increased 44% in the Americas, 25% in EMEA, and 19% in the APJC area. Hyperscaler orders grew at triple-digit rate, while service providers and cloud orders surged 95%. Enterprise orders rose 21%, and public sector orders increased 30%. Networking orders climbed 40%, marking the 8th consecutive quarter of double-digit growth, and networking revenue increased 28%. Cisco secured $4 billion in hyperscaler AI infrastructure orders during the quarter, and that brought fiscal 2026 orders to $9.3 billion, about 4.5 times the fiscal 2025 level. Acacia generated more than $1 billion in orders. Cisco also shipped more than 850 400G and over 75 800G coherent pluggable optics. The company added 3 hyperscaler design wins and expects several more AI design wins over the next 6 months across its Silicon One platform and optics. AI infrastructure orders from NeoCloud, Sovereign Cloud, and enterprise customers exceeded $400 million in the quarter and topped $1 billion for fiscal 2026. Enterprise AI demand also strengthened. AI tagged Nexus switch orders increased more than 85% sequentially, while data center networking orders rose more than 35%. Wi-Fi 7 represented more than half of wireless orders. Security orders grew by double digits. More than 1,500 customers adopted Cisco's new security products during the quarter, bringing cumulative net new customers to more than 6,400. Firewall orders increased more than 30%, and Splunk added more than 280 new logos during the quarter and surpassed 1,000 for fiscal 2026. Collaboration recorded its strongest quarter in 7 years, with video device revenue rising 40%. Cisco also resolved 145,000 customer support cases entirely through AI during fiscal 2026. Its Circuit AI Assistant processed more than 75 million prompts in the fourth quarter. That's nearly 4,500 enterprises that have signed up for Cisco's cloud control since its June launch. Resilient infrastructure services powered by Cisco IQ now serve more than 8,600 customers. Cisco expects fiscal first quarter revenue of $18 to $18.2 billion. That's well above the analyst consensus estimate of $16.8 billion. The company forecast adjusted earnings of 132 to 134 per share compared with the 116 consensus estimate. And for fiscal 2027, Cisco expects revenue of $72.2 billion to $73.4 billion versus the analyst estimate of $68.69 billion. Adjusted earnings are expected to range from $5.05 to $5.11 per share above the $4.80 consensus estimate. And Cisco expects hyperscaler AI infrastructure revenue to reach $7.5 billion in fiscal 2027, nearly doubling from $3.8 billion in fiscal 2026. So just a lot there, and I'm sorry for going through it so quickly, but man, that actually seems like a good report. Seems like that is conducive to the AI trade. But if we go back to Pro and we take a look at Cisco itself, down we go. Down we go. The interesting thing to note here for the purpose of trading today is that we're basically consolidating and trading sideways right near the impulse low that we had from the earnings report. Initially, on the top line number, stock went higher, but reversed, settled lower, and is settling in that same area here today. So trade purposes, I'd watch maybe 117 to the upside and maybe 115 to the downside. A break and retest of that level in either direction might set up a fairly decent intraday trade here today.